All right, welcome back to another week of the Trading Triangle. Looking forward to getting into the charts, getting things rolling. How you doing this week, Sean?
Yeah, good, really good. Having a really nice day. Spent some time with some family. Went to the gym, so I'm having a good day. Yeah.
Nice. Oh, by the way, I went and got a whole gym set. You mentioned that. I have to jump right to it. We got a whole bench and like this whole thing set up in my garage. My oldest is all excited about it, so I'm gonna start getting swole,
Awesome.
Sean. It's gonna be great. How about
That's
you, Jay?
We come on next week, and you'll be like twice the size.
Yeah, I
Fantastic.
hope so.
Yeah.
I mean, I think that's gonna be amazing, right? Get a workout in before you start this live. That's gonna be amazing. The
Just
week was
come in
good,
with
man.
a
It's
towel.
yeah, and
Yeah.
and exactly. You can change your looks, throw some jabs, throw some hooks.
I like it. I'm gonna give it a go. Looking forward to it. We're gonna get into the charts like we always do. Quick disclaimer up front: this is not financial advice. This is just merely entertainment, right? Purely for entertainment and educational purposes. We get together every week and go through our trading ideas, look at the markets, and look at a few tickers that we like. And hopefully it helps you out with your trading and your investing adventures. So thanks again for tuning in, and be sure to subscribe to the Trading Triangle on YouTube. Smash the like button, helps us out a lot. So thanks for that as well. All right, so let's get into this week. I don't think last week was too friendly, so I guess we could start with that note. Down quite a bit, a lot of red here. Woo-hoo. That is ugly. This is
There's a
not
sea of red.
Yeah, that heat map is brutal. I mean, look right off the bat, Tesla, you see double digits down 11.77%, Amazon down 9.5%. Some big names. Google and Microsoft giving up quite a bit. Not an easy week. Some red trades for me. How about you guys?
Yeah, it was a red week for me, unfortunately. Not by a huge amount, but it was still enough to be kind of, a bit knocked. But of course, that's how trading goes. You can't be green every week. You can't be green every month. So
Yeah,
we march on.
managing the risk sounds like.
Same here. Most of my cash secured puts, the levels that I had put the trade in for, the current price is way below that. So I ended up had to roll my options for further weeks out. So yeah, if it doesn't recover in a couple of weeks, I'll have to continue rolling my options, and my capital will be stuck, and I'll collect lower and lower premiums as we'll go through the weeks.
Still collecting, but yes, I hear you, Kay. Yes, and so if you're out there and you had a rough week, there you go. All three of us had the same, so to speak. But yeah, it's good to hear managing risk and collecting some premium as we're going. I definitely like the sound of that, Kay. The VIX was spiked. What was that? Up 23% on the week, up over 17.
It was 13 something last week when we
so up over 23%, call it. And fear and greed index dipped nicely down into the fear zone at 36. I don't recall what it was last week, but I thought we were neutral.
It was neutral. It was close to I think above the 50 point, but it was still in the neutral, but closer to the greed side.
It says it's 49 last week.
Oh yeah, there you go. 49. Yes. See?
There we go. What will we do without Sean? Thank you, sir. And so running through the the tickers that we like to look at here, just to get a general idea of the markets overall. The SPY was down almost 3%, down 2.92. It's up 12.5% on the year, but that number is dwindling. The QQQ was down 3.48%, still up strongly 34.4 on the year. The diamonds DIA down 1.9%, only up 2.5% on the year. And then small caps, you guys, I know I like to talk about small caps because I do think they're leading the way as far as health of the economy is concerned. You want to pay attention. And down 3.78% this week. So IWM closing at 176.67. And down 3 points. Oh, hang on here. Make sure I got my.
Sorry, that was me.
Okay, good deal. For a minute, I was like, oh no, I don't know how that could be me and what I would do. All right, good stuff. Thanks, Kay. And so Bitcoin, last one on the list to talk about, 26,600, call it right now, 567, excuse me, on the chart here. But right around 26.6, which is nice that it's holding above 26K again, up 60% on the year. We're going to look at Marathon Digital, ticker MARA, and why that's not kind of correlating anymore with Bitcoin, what's going on there. So that'll be interesting to check out. Anything else I missed on this chart, you guys?
No, it's pretty much basically from greed. Now we're getting back into fear. It's the same cycle.
Yep, you said it. We do have earnings this week, but not a lot. I've got, for myself, actually really interested in Carnival Cruise Lines at the end of the week, but we got a couple other names earlier on. What are you looking at, Sean? Anything?
I'm looking at Micron there, to be honest with you.
Yeah, very good.
The only name that really pops off the page there. Obviously, you've got Nike as well. Is Nike at the beginning of earnings season, or was that right at the end? Because is this the start of the new cycle?
Okay.
I think it's the end, right?
Okay,
because I believe
yeah.
the second week of October is when we start with the banks, and banks are generally the first ones to go in the earnings.
They'll kick it off for us.
Yeah,
we're at the end then. Okay.
Yeah, and Costco there on Tuesday after hours. I'm definitely interested in see how Costco numbers look.
I would love to own 100 shares of Costco one day.
Yeah, buddy. That's a good one. Steady earner right there. And then you can get those hot dogs. I think they're still $1.50. So
Yeah, they're still. And
but Micron too. I'm with you there, Sean. I'm definitely interested in, the semis have rolled over and really lost some support there. Just looking at SMH, for example. So Micron, maybe we see a little bit of life there. Maybe they'll give a little bit of guidance. Who knows?
No, funny you talk about Micron. I'm just looking at the chart right now, and it's closer to its 50-day moving average on the daily.
I'm a bit disappointed I didn't bring it up because I only saw it when I analysed the setup we're doing now. I might do a video on it this week. Who knows? Nice.
Okay, I'd like to see that. All right, stay tuned. Well, keeping it rolling, we're going to get right into the charts. And Sean, you've got the SPY up here first. I appreciate you throwing the chart up here. I'll hand it over to you to start.
Yeah, of course. And obviously you can see it's a little bit messy. I've got some levels on there, but I won't talk to the levels too much. But we're currently trading at 430. And last week we were kind of hovering around that 20 moving average line. It's actually the black one that's kind of moving down from the 50, which is the blue line, kind of through the yellow line. And I said last week, we're kind of pushing down quite aggressively because we gap down and push down. And it's done that. I mean, obviously, the news midweek obviously would have helped as well with Jerome Powell talking. It's pretty much how it is, as you know. But yeah,
we like to destroy any fun we're trying to have.
Well, yeah, exactly right. And we said around about 431 to 433, I think, last week. And it's actually pushed down lower. But I know what you're here for. You want to know what my thoughts are going forward. And you can see a little grey circle there kind of marked around that 426. And that's...
Yeah, that caught my eye.
That goes back further. The reason I didn't zoom out more because it makes the chart look a little bit more messy and you can't really see the bars properly. But that 426 actually goes back further. And obviously we've got that trend line as well, which again, the trend line goes back a little bit further, but you can't see that because of us ruined away. And also I didn't want to make it too messy. But that's a couple of points of confidence there. So we can kind of trade flat/down, kind of dribble into it. And then perhaps we see a little bit of a bounce and have a more positive October because September generally isn't a very good month for the stock market. So we can kind of get around this week and then start nicely in October. That's kind of my anticipation. But yeah, not a great week. It's quite disappointing, but that's the market. It happens.
Yeah, one more week to go to get out of September here. August and September, seasonality, right? And notoriously difficult. And you mentioned, 433 was the level we talked about last week. Lost that, which I didn't love to see. But next support I've got, I didn't have the 426 level, although I like that you pointed that out. So, and thanks for noting that is from a level support that goes, further back in time. In addition to, you could see in June, some testing of that level. So I noted that added to what I had. The next major support line I've got, and just looking at the volume at each of these price levels as well, I've got 413.67. So, and then after that, 395. So that's good. I don't like a 3 handle. I don't want to see a 3 handle. I think that would be bad. So hopefully this 426 level, with like you said, with the trend line there, giving a little bit of additional support. I like that. But you mentioned the yellow 20-day moving average crossing below the 50-day, right? The blue line. That's not great in the near term. So But it's largely just a reflection of the last couple of weeks in this rollover, and we're getting these lower highs. So a little bit concerning. Need to find some support here. Okay, what were you gonna add?
Yeah. So on option side, especially with SPY and QQQ, you get options expirations every single day. For next week on 9/29, every week you're 25, 26, 27, you have put to call as 0.51 and so on and so forth. But on 9/29, you have 2.36. So there's a lot of hedging going on the put to call. Why? It's because the core PCE numbers will come out. And what we heard from Jerome Powell last week, so his actions were very dovish, right? There was no rate increase, but his call or his demeanor was very hawkish. And end of the day, the market was hoping, hey, next year, 2024, we'll have 3 rate cuts or 4 rate cuts. And now I think it's drawn to 2 rate cuts or something like that. So that, of course, changes every month. And now it is expected that we'll probably get 1 more rate hike next month or November, I believe, before we call it for the year. So based on that, I think there's a lot more hedging going on for next week.
That makes sense. Right? Yeah, it was higher for longer, right? That was the talk. So yeah, so you said 2.36?
Morgan Stanley
2.36, yeah. Put to call 9/29 expiration is 2.36 put to call ratio.
What was that, Sean?
I was just saying, Morgan Stanley came out today and said there won't be any more rate increases. So that'd be interesting.
Yeah,
more banks come out and say that.
No, and another I just heard from Bank of America came out. I think it was Friday. They did mention that the stock market, their new price target for stock market is about 4,300 or 4,500 level, which is the market will be up from here onwards. And generally, the last quarter is always a decent quarter, especially with people generally call it the Santa rally, right? At the end in December. So if that ends up happening and we end up higher than we started the year, we'll forget what happened in September.
Everybody will be just fine. Yeah, no doubt. I think this week is going to be really telling with the core PCE numbers, the closing out of the month. So it should be interesting. We got the Qs up next. What do you think about QQQ, Sean?
Yeah, this was a little bit more simple, just a bit more of a simple observation. And we can see this is the weekly chart for QQQ. Just want to zoom out a little bit, just because this finds some footing, really, find a little bit of hope. But we can see that the bar that we're on now, obviously we had a bad week. We can see that. But we are kind of on the 20 moving average, which, again, to me, that's not too bad. And then we've got that kind of trend line coming down. There's a bit of resistance, and I basically noted there that from here, obviously it's not particularly accurate, but from here is 4% to that trend line. So that is quite a jump, but very doable within the space of a week. So just basically what I'm trying to say is this next week has to try and reclaim that 20 moving average, essentially.
I mean, 3.48 would have dropped this week, and it could be a couple weeks and get that 4% recovery, and not a problem, to be honest. 2-3 weeks it could happen. I'm with you that it's nice that we're above the 20 or right around the 20-week moving average, and I'm glad you zoomed out because I was only looking at the daily, and it really it's also though still above support. Like, so the SPY dropped below the 433 number and lost that support, but I have the Qs needing to hold basically 355, which is what you've got noted here. So yeah, I do like that level, and it's nice to see it on the weekly. Next level support I have down, as far as like really strong support, actually is a ways away. So I think I was looking pretty hard for strong levels of support this morning and not noting like maybe the lower volume price levels, but I got all the way down to 316.32. So I'm glad you've got some levels in between.
You've been looking at volume profile too much, haven't you?
I know. I was just thinking that right now. I'm like, I think I am like just staring at the volume profile these days. I need to back away from the screen a little. Well, what do you think, Kay? Anything interesting in the Qs?
Pretty much same trend as SPY. Your 9/29 is put to call is 2.17, which is pretty similar to SPY. SPY is much higher though. But I guess that they are still hedging based on the core PC coming out on Friday, which is actually pretty, like 29th it's coming out, I believe. worst timing you can have, like numbers coming out on Friday. You might have the greenest week till Thursday, and then on Friday everything just dumps.
Absolutely dump, yeah. Or maybe the other way around.
Or the other way around, yeah, exactly.
Yeah, that can make for tough trading, or can make for really nice trading, actually. You know, if you notice something like that, you don't have to trade that last day. You just trade it clean through Thursday, and then, you know, take your profits and see how things play out before you get back in. That's definitely a solid strategy when you have these kind of volatile uncertainties. But yeah, let's see. Anything else to add on the cues when we get into some tickers here?
No, I
Other
think that's
tickers,
it. I
I
think we
should
covered
say.
most of it.
I like it. All right, Sean, what do you got on Amazon?
So, guys, this is the first week I haven't covered Neo for the whole time we've been doing this on YouTube or Twitter. So I don't know if that deserves a medal or if I should be fired, but I mean,
I can't believe I didn't notice that till just now. I was looking at our charts earlier and that didn't click.
I figured I'd give it a week's break. You know, I thought,
it'll be good.
Anyway, so this is Amazon. It's a little bit different, a little bit of a bigger stock, bigger market cap, at least for me anyway. And we can see this is the 4-hour chart. Nate, I know you like the 4 hours, so I'd be keen to get your thoughts on this. But we can see a triple confluence. I'm pretty sure I spelt that word right, but yeah. We've got the 200 moving average and the trend line and a support of 126, which we've hit recently 3 times throughout the month of July and August, which looks fairly solid. But yeah, triple confluence, I like to look for at least double, but triple is even better. And obviously zooming out on the bottom right corner there, we can see on the weekly, we're kind of touching that 20 moving average too, with that same 126.50 line just below. And you can kind of see the zoomed out version of that trend line as well. So yeah, that's kind of all I'm able to cover on this. I do have a more detailed video on my channel, which you can see around Amazon stock and the possible trade behind it. But yeah, I just want to get your thoughts on this possible price action.
Yeah, I like this spot here because of the triple confluence. Like basically you've got a go or no go kind of situations. It becomes almost binary, because if we get a nice bounce here, then I'll feel really confident because you've got these levels and this trend line and the moving average all right at that spot. But if it breaks, then I'll feel just as convinced to the downside. I mean, I don't know about you, Sean. Is that how you're approaching it? Is that
and that's why I've got that level down there. So 114, I didn't quite finish I should have gone on further, clearly. But if we break down, obviously 114 I've got there. And if we kind of break up and move on, I'm looking at that 145 level, which you can't quite see because of the bird, but that's 145 up there. And you know, Amazon can actually go a bit higher than that towards the end of the year. And like we were saying with SPY and QQQ, if we push on to the end of the year, that will bring up Amazon as well. But yeah, that's the kind of 2 levels I've got there, 114 and 145.
Yeah, if anybody has any questions or comments, I'd love to hear other thoughts on Amazon. I'm kind of conflicted, and I think it's because I was looking at it a little too closely this week, which, as you can see, was a rough week for Amazon. So what about you, Kay? What would you add?
So I think with Amazon, there are a couple things that I'll take a little bit of a fundamental side of the approach rather than very technical approach.
Nice.
Q4 in general is good for companies like retailers, right? And with the holiday season approaching, it's most likely going to help Amazon's revenues go up. We also are seeing companies generally moving towards digital transformation, which helps with the AWS and Azures and cloud, Google Cloud, all that stuff. So more and more companies are moving from on-prem infrastructure to cloud. So those are 2 very bullish cases for Amazon to begin with. Now, of course, we're a trading channel. We talk about trading. One thing to note on the put to call ratio, that every single week, because this is a weekly, you have weekly expiration dates on Amazon, unlike SPY QQQ where you have daily. Everything is 0.39, 0.59, 0.86, 0.68. So it's very bullish. There's a lot of call options as opposed to put options on Amazon. And honestly, I think this is also one of the stocks for people who watch trade. Should be in your long-term portfolio, because Amazon, as just like those other big 6 or big 7 companies, Amazon is going to keep growing in the future. So that was just my take on not on the chart, but as in a company, because you brought up a good company that I always cover. So
yeah, it's a bit different for me, isn't it? Bringing up these type of companies. Might do it more often.
I love to see it, right? Bring in some technical analysis, mix in the fundamentals. Good stuff.
Yeah.
All right, what do we got next here?
So next up, we've got XLK, which is again is another different one for me. This is actually an ETF. It's a technology ETF, and let's start off with. There's a lot to see on here, but let's start off with the bottom right. We've got the top 10 holdings for the actual ETF, and you can see it's heavily dominated by Apple and Microsoft, 23% and 23%, and then below that, obviously, you've got Nvidia, Adobe, AMD, that kind of thing. And it's only a holding of 60 companies within this ETF as well. So it's not that many compared to others, at least when I've looked in the past. But let's go ahead and look at the weekly first, which is the kind of bigger picture that you can see with all the dots on it. But we can see the price action recently has kind of broken down below this 20 moving average. But we're kind of approaching that 163.50 line, which we can see kind of towards the middle of the screen. It kind of acts as a nice resistance, and we've got that kind of nice push down as well. So those wicks have kind of been pushed down, so it acts as kind of more of a strong resistance. Therefore, kind of theoretically, it acts as more of a strong support, which we had recently, basically 5 weeks ago, 6 weeks ago. And throughout the chart, you can see the dots. I won't talk to them too much because they're kind of obvious what they are. It's just touching the moving average points. So we can see the contact around the 20 moving average. So we need to really reclaim that next week if we can get a nice green week out of the market. If not, we're going to break this kind of 163 level, which again will be strong. If we do break it, I imagine it will come down nice and strong. And then we might move towards the 50 moving average, which I've got a big old yellow arrow there, yellow hand.
It comes into play.
And it's quickly coming up there. So we might see that come up to kind of 156, maybe 155 level if we were to kind of go down in that sort of fashion. And the last thing I wanted to touch on was the monthly chart, which is the square on your left. We can see that last month, a bit like a Tesla chart we brought up last week, the wick is absolutely massive coming back up, and that often is quite a good sign. And we've come straight back down this month. Now there's 1 week left. If we can push up to that kind of 169, 172 level, back up to above the 20 moving average on the weekly, maybe we can get that candle wick back up, and that'd be, I think, really bullish for technology at least going forward on this particular ETF at least. But obviously, we'll see.
That's really great perspective on the monthly. I like that a lot. KAYE, do you look at monthly charts often?
Yeah, actually, funny you brought that up. This time in one of my tickers, I'm actually using a monthly to talk about the trade. But coming back on this particular piece, and I think it's important to note, you only have 2 companies that you need to watch for this ETF. Nvidia, Broadcom are not going to move the stock. It's Apple and it's Microsoft. As long as you cover those 2 stocks, you'll know exactly where this ETF is heading.
Yeah, that's one of the things with these ETFs that I often find surprising is, this right here, almost half the XLK is made up of Apple and Microsoft, 23 and 23% each. And when you look at things like XLE, then same kind of thing, right?
ExxonMobil, Chevron,
right? And so really, it's just a proxy, I guess, for getting into these big names in some respects. So yeah, the monthly. I just wanted to comment one last thing is we got that higher high there. So if we do get that wick that you're talking about forming this week on the monthly, that would be great. I'm with you. And it's definitely worth noting, I think, that we pushed up to the 180 for XLK, which was higher than we got to, what was that, back in July of 2021.
2022, yeah,
2022, the end of 21, I guess it was, right? So, interesting. I'll be paying close attention.
Yeah, good stuff. It's one of these new kind of ETF things I'm looking at. So I say new, but I normally look at stocks, but I'm looking more into ETFs these days.
Yeah,
just to broaden my knowledge a little bit. Yeah.
Awesome. And
so that's it for me. Yeah, and I've got a couple of videos coming out this week. One of them, obviously, a Micron, which you touched on earlier within this live stream. And I did a video today on Tesla as well, which is over on my channel, which you can see here on the screen. But I'll hand it over to Nate for the next step.
Thanks, Sean. Yeah, be sure to follow Sean on X and catch his YouTube channel as well. Great stuff as always. And if you missed Neo this week and you're missing out, I'm sure you'll find more Neo from Sean later this week, no doubt. I'm guessing, Sean. I don't want to put that pressure on you.
Yeah.
All right, let's see. What do we have next? Marathon Digital. So I mentioned that I would get into this, and Bitcoin again. It had dipped below 26K, right, and then recovered, and now it pushed to 27K. It's now down around 26.6, and so you don't see the same price action with Marathon Digital or names like Riot. They just not acting the same way. So I thought I'd take a look and see if there's any good reasoning behind it. I actually posted in my newsletter that you can subscribe to via Substack this morning. I got into the details a little bit, but long story short, just in the interest of time here, if you do want to read the details a little bit more, please check it out. But in the interest of time, there's not a ton. There's like good news and bad news for Marathon Digital, right? They've retired a bunch of debt, which is great, but then they've also got some headwinds, and so why is the stock just continuing to drop? I mean, it's basically been cut in half in about a month's time. And I just looked at the technicals if I can't make sense of what's going on in the big picture. And so I'm looking at the chart here, and the range that we had traded so beautifully between 850 and 1060, call it 856, 1064. We broke out, and now we're right back at the bottom of that range. So for me, I really want to see 856 hold, see a bounce here. If not, I think $7 is in play, 691 being the support line I've got. But we've got the 20 moving average rolled over, the 50s rolling over. Just not a lot of positive news here. RSI might be oversold. I think that's about the one thing on this chart that gives me some hope that there might be a bounce this week. And ultimately, as far as trading it goes, I'm looking for a break of that trend line before I can get too bullish. You'll notice there that the 20 moving average is sliding down right at that 1064 level, which is just above that trend line that I've drawn. If we get a rejection there, that's going to be if we get a recovery that rejects around these levels, I think that's going to be a pretty strong short trade setup. So that's kind of actually what I'm looking for. I don't understand why it would be dropping lower here, and then you would want to get bullish on it, given that Bitcoin's already moved higher, right? So it doesn't feel like very positive price action, quite frankly. Kay, I saw you're off mute. What are your thoughts on Marathon?
So let's talk about first the put to call. I think put to call is everything is very positive. You have 0.49, 0.56, 0.69, 0.53. So you get the trend. It's a lot more call options. Yeah. What I'm liking in this chart is, if you remember, we had stopped talking about Marathon for last, I would say, 3-4 weeks now, because it just broke through your the trend, and it's just going on. So our real strategy, or buying cash secured put and selling covered calls, was just out of the picture. It was getting too expensive. I think as we get more confident in our trade or in our range for Marathon, maybe we can start to look into bringing that back, because it's going to start trading in that range once we get that confirmation.
So you're giving me something to look forward to. I like it. I got to be optimistic. Glasses half full. What do you think, Sean?
I was going to bring that up actually with KAYE, but he's excited for it to trade within a range. I was waiting for that. But yeah, no, going back to the chart, I think 856 or 850-ish is definitely a point that I'm looking at. I'm going to set a couple of alerts just to see what happens with it. I probably won't trade it. But yeah, I think a move back up to that trend line is key, but you've got almost 4 points of resistance there. You've got the trend line, the 2 moving averages, and the resistance line. So that's going to be really, really tough to get through. You might take an earnings report or a big piece of news to get through that, generally on a technical basis at least. But yeah, this is not one I'm going to be looking at, but this 856 level looks really, really key to me. But yeah, I mean, if it breaks that, like you said, it could be a strong move down to that kind of $7 level, which I'll be looking for to short, to be honest.
Yep. All right. So it sounds like Kay's looking to trade the range. He's got me excited to trade the range again. We all agree that it's a tough spot here, but the good news is Bitcoin is acting fairly well, like fairly decently. So maybe that is what, maybe you can pull Marathon back up out of the trenches here a little bit.
Do we know when they report earnings?
Oh, do I have that here?
Hold on, I'll take a look at while you guys continue.
Oh, that'd be great. Thanks for grabbing that. All right. Well, yeah, let's keep the chart rolling in a shifting almost completely different direction. So
November 14th.
November 14th. Thank you,
Mhm.
Marathon. Okay, so we got a ways, honestly. All right, so I
Which
brought
is a good
in.
sign. Which is actually a good
yeah?
sign, right? Because once I think the market moves away from your fear back to neutral, even towards greed, you may be able to form a range until the next catalyst that is coming up, which will be your earnings.
Okay, I like the way you're thinking about this. So I came in like without a lot of positive thoughts on Marathon. I just wanted to talk to it, and Kay, you've got me reinvigorated, re-energized to pay closer attention. So
Yeah,
thank
because
you for that.
when you know how it works in options, right? Once you find a stock that trades in range, it just becomes like, it's like you keep repeating 0.6,
Yeah.
0.7, 0.8% a week. It just adds up.
Yeah, it's my favorite. So we got to get back to it. And actually, it's what I'm kind of seeing here. It's a nice segue to a completely different sector in energy. So this is Transocean, and rig is the next chart we've got. And this is the daily, and we've been trading in this range between $8 and call it 880. 879 is what I've got noted. And we're back at the bottom of that range, but it did bounce nicely to close out the week. The bounce rejected off the 50-day moving average and closed lower. So there is that. And the 20 days also right there. But the 20 looks like it's ready to curl and cross back above the 50-day moving average, which would be a positive sign overall. And at the same time, RSI is creeping back above 50. So bullish in that respect, but not overbought. And MACD also in the positive range. So it had the nice big push. It's settled in. It's consolidated a bit, and I'm looking for it to march back up and either hit the top of the range and hold the range, or possibly look for a breakout, which would be when I start talking to my friend Sean here. What do you think about this, Sean?
I like your dotted line. That's exactly what I've been looking for.
Nice.
Just kind of move up, come down, retest, and go from there. But generally, being below 2 moving averages, I know you said it was curling up and the RSI looks good. But the way the market is at the moment, it's kind of a bit rocky. You don't really know where it's going to go. So it could easily break that $8 level and come down to that kind of next big volume spike, which you've got there with the volume profile on the right, which is about 750-ish, which is
Right.
kind of the support. But yeah, it's hard to say really. It's kind of like it's kind of trading within a bit of a range between this kind of 8 and 9 level. But yeah, I mean, I won't be looking at this until it hits that kind of top of the range, like you mentioned.
But if I go to K, he's gonna have a
Yeah, he's
totally
gonna love
different
it.
perspective, right? We're in a range, K. Is that what you're seeing? You liking the setup here with rig for how you might trade it?
Yeah, I mean, if I can get a bounce at 801, then pretty much I can see that 801 remains as your support level, right? And then for me, from 801 to 879, that's the range that I can continue to sell CSPs, sell a covered call at the money to collect premiums a week.
Yeah. So and the premiums aren't too bad on rig. They're not something like you would get with Marathon, right? We've talked in the past where you can get 2, 3, 4%, like really ridiculous premiums in just a couple of weeks with a name that's as volatile as like a Marathon Digital. But you're still getting decent premiums in a name like rig. And you can collect them in addition to, well, I'll just say that you can trade them weekly, right? There's enough options there. It's not like you can only trade monthlies or what have you. So
exactly. And I can give you a couple numbers, right? So it has decent open interest. So for next week, your open interest for calls are 12,135 and puts are 14,410. So just being in thousands, right? It just tells you that there is a lot of calls and puts that are generally, so there's a lot of open interest. That's a good sign on any stock. Your implied volatility is 52% and above, which is also a good sign. And your put to call ratio is 1.19. So a lot more hedging on the downside as opposed to upside. So that could something that will go ahead.
Oh, no, I'm saying interesting. Sorry.
Yeah. So that will give you a better premium, on the put side when you're opening a CSP, because there's a lot more put options open. So
yeah. No, so I'm looking at accumulating at 8. I've actually got in my Savvy Trader portfolio, which I should get a link out there so folks can follow it. It's free and you can see all the trades I'm doing. But I've loaded up in energy names. Rig is definitely one of them. It might be the largest I've got out of the names I've got. And I added SLB and NVT, so a few tickers to look into in the energy space. But yeah, so rig here, I like accumulating at about $8 and looking to sell covered calls at around $9. You can sell them, right away to collect some insurance, or wait until the shares move up to that level around 880 and get a little bit juicier premiums. And then, as Kay mentioned, selling cash secured puts here at $8 is another way you can just collect premiums. And then if you're good with it, dipping and buying at the $8 range, you get the position assigned and start working the calls from there. So that's the last chart I had here for this week anyways, but I'll be posting more on X throughout the week for sure. And also I've got, as I mentioned, I wrote about Marathon Digital this morning on Substack, so check out A Trader's Education if you get a chance. And I'm also writing for Wolf Financial, so enjoying that every Sunday, posting for Wolf, and wrote about a few different trading patterns over the past couple of weeks, having a good time there. So that's where you can find me. And of course, every Sunday with these guys on the Trading Triangle. Do subscribe, do smash the like button. And with that, we've got AMD up next with Kay. Hand it over to you, sir.
Thank you. AMD, we have been covering, I don't know if you guys can see this little bit of a highlight on this side of the chart versus it's a little darker on the other side. I don't know if you guys noticed that or not. I was trying to, try to make this chart look fancy, not as good as Sean's, but learning.
I can see it, Kay, and I can see the shading, and I feel the pressure as well.
So something interesting happened this week with AMD. I had AMD. So currently I'm in a trade with AMD, and I'm in a trade with AMD from last 3 weeks, I would say. So my initial trade was at 102. And if you can see, 102 has been a pretty good level on our fib level. And the stock has bounced from there a lot of times. So that was our baseline, strike price we chose. After we got this trend line that was broken down, 2 weeks ago, I had to roll my options. But what used to happen is 102, every time you would see the stock dropping below the trend line, it would just reclaim that trend line back up and it will bounce back from there. This time we have this big gap fill that happened, especially after Jerome Powell's speak, and boom, the stock just like went down everything. And now what is happening is now we have the stock price is very close to its 200-day SMA, which in a long term, at least for the midterm, I would say is a bearish sign. Good for people to accumulate stocks. RSI, as you can see, is also at the bottom. It's almost close to 30, which will be the oversold territory. So I do think that AMD has been oversold right now. There's a lot of pressure on AMD. And I think there's a lot of news around semiconductor space as well. And that is, you can see NVIDIA is down 10% for the month. And you can see the same pressure on AMD. I also have SLB that you mentioned a couple of weeks ago.
Oh, yeah.
So I've added that in the watch list. We have Micron. So I think continuing to watch AMD to see if it falls below the 200-day SMA. And I'm already in the trade, so I'll continue rolling my trades to not get assigned. But I think this could be a good place for a longer term trade if you accumulate stocks at these levels, because once you have at lower levels, you can probably, once that the change in cycle will come for semiconductors, you would be able to get on a fancy, pretty hefty profit on the trade. What do you guys see from here on this chart?
Sean.
So, yeah, me and you have had a little bit of a battle with RSI and our discussions in the past. But this is a fine example of your preference when trading with the RSI. And this is more of a long-term aspect to RSI where it actually comes into effect. It actually kind of works. Whereas my kind of view on it is kind of with day trading, kind of shorter term trading, it doesn't really quite work because it can keep going in either direction. But to that point, I think this is, if you are a long-term investor in AMD, we've had a significant pullback since kind of, what's that, June, July kind of area?
Yeah. Exactly, May, since we had that big run up with the NVIDIA. Yep.
Even better. And this is my ideal space because of you to add to a long-term position if you're looking, for AMD for the next 5 to 10 years, for example. And this is where I'll be adding, quite simply on that. But from a technical point of view, we can see a kind of big rejection from that kind of 102 line. and the trend lines that kind of acted as kind of a bit of a breakout trade, but obviously towards the downside. And we've had a bit of selling pressure down there. Now it's all about kind of trying to find support, which I think we are kind of doing where we are now, because we've got that 200 SMA, which you mentioned, and also that kind of, what is that, 93.50 level as well.
Yeah.
So there's kind of a bit of double confluence there, which I like to see. And this is going to be one of my watch lists for this week, that's for sure.
Yeah, I'll be watching this as well, Kay. I've actually got a couple of trend lines drawn that form, from the top of this, basically the exact same pattern you've got here. So from the very top down to where we're at now, there's a upper trend line and that you can draw out pretty cleanly. And then below it, if you draw another trend line on the bottom side, you get a bit of a wedge. It's, dropping there, declining, and we're at the bottom of the wedge, which also is, that 95 to 98 price range is where a ton of volume has been. So there I go again with the volume.
No, that's good. Because I don't have it on my chart. It's good to know that there's a lot of volume at 95 to 98.
There is. And so really, I think this is a key spot. And I think maybe Micron will be interesting, right? If we're holding right around this level as we head into Micron's earnings, and then there's either a positive or negative guidance, it might be enough to get AMD bouncing back up in this wedge or breaking below. If it breaks, I'm going to be looking at considering taking a short position, because it looks like it wouldn't find support until about 85. So that'd be quite a drop from where it's at now. So definitely paying attention to that. I like that you're watching AMD. This is super interesting right here.
Yeah, I'll bring my wedge back again. I deleted the wedge for this chart because I was getting too much.
I thought you had the wedge. Okay, cool. It's not my imagination.
Yeah. I had the same after we spoke like 3 weeks ago. When Sean pointed it out, then I drew it and I brought it last week, and then I removed it this week because it was getting too many drawings on the chart. So I was like, I'm gonna keep it clean.
That's perfect. I love it. All right, good stuff. What else do you have?
Okay, so this is. Go ahead, Sean. You're saying something.
No, we're going to have to rename your newsletter to Nate's Volume Profile.
Nate's Volume Profile.
He's talking about it.
I've gone all in on the volume profile. There's no two ways about it.
No, that's perfect. All right. I think moving on, following the same theme as Nate, energy sector. Now, this is going to be, I'm looking at ExxonMobil from a long-term trade standpoint, not like a week trade. And I'll tell you my theory on this one. So we'll start off with this trend line, right? As you can see, we have this nice uptrend line. The stock has hit the trend line a couple of times, and then it got rejected, come back. It's making higher highs. However, the higher highs is flattening out. If you actually measure it, you will notice that the higher highs from the first, second, and third, it's the gap is not that big. That's the first point. The second point that I have is that we have this nice support level at 99.56, which was actually pretty, when you run a lot of cash secured puts, the $100 level was a very psychological level for the stock. So, you used to get a lot of premiums on that. So that's one thing. Couple other points is that $130 is a good price target right now by many analysts that they are looking at. You have the revenue for the company is almost 87 billion per quarter that they bring. So it's a pretty, hefty profit they are bringing. There is always increase in the price of the crude oil, which directly impacts how much revenue, ExxonMobil brings, or any energy stock for that matter of fact. And the current price target for ExxonMobil is around 146, that within a year the stock should be around 145, 146. So I'm taking 130 as my baseline profit level. And if, let's say, the stock bounces from here or stays in this range, you have about 10% upside. However, if we go back to the support level of 99.56, you are looking at almost like 23, 24% upside. So that could be a longer term trade. Now, interestingly, if you couple that information on the chart to the real world scenario, you have the holiday season coming up, which directly leads to traveling. A lot of people will travel. Yep. They will take planes. They will fly. They will take trains. They will probably drive, stuff like that. So if the energy price keeps going up, it will directly impact the profit ExxonMobil brings, which will push the stock price higher, at least in the short to mid term, And that is what I am looking to target for the next 3 to 4 months. If I can capitalize on that. If it gets rejected, and honestly, if I'm looking if I can collect ExxonMobil at 99 level or 100 level, more stocks in the next 3 to 4 months when they report the Q4 in Q1, that's what I'm looking for a trade. So it's going to be a midterm trade, not like a weekly trade or something like that. That's what I'm looking at ExxonMobil. How do you guys see it?
Well, I see a triple top that you highlighted, which is
Oh, right. Yes.
That's kind of tough. That's kind of tough to get through. That 120 level is going to be, I don't know, maybe once it gets through, because it's a triple top, if it does break above, like you mentioning, it could get some momentum behind it. Especially if there's news like, you've got the oil supply that, with respect to the reserves that we're keeping, right? Those have been depleted. I always forget the right acronym there. And then I believe, if I'm not mistaken, right, Biden's kind of, not to get into the politics at all, but part of this is the relations with OPEC and the oil producing over there in the Middle East, and what's going on with Saudi Arabia. And those talks seem to, he seemed to be talking pretty tough there for a while, and that seems to have gotten quiet. So if that stays quiet, and that could be something that drives energy prices higher. I'm not saying it'll drive it, but there's not a lot of news or not a lot of headlines adding pressure to hold prices in check. You could see those things creep up. We're heading into the winter as well, right? So it's interesting trade here, Kay.
Yeah, I think from my point of view, I'm looking at that triple top as a bit of support moving forward. So you spoke about a nice little move through it, and perhaps it will gain some momentum. But if there was to be a pullback, I'd be looking for that kind of breakout opportunity. So we get a nice little bit of volume coming up to kind of 122, and we get a couple of bad days in the market. It pulls it down to that kind of 117 level. That's when I'd be looking at getting in, because it looks really solid, that kind of level. 117, probably 116, around that kind of area. I'm also thinking about the trade that I would have taken if I had actually taken it back at 107 to 114. I'm not going to let that go. But and on top of that, the two moving averages you can see throughout the chart, I was looking at whilst you guys were talking. It looks to be quite a nice, both of them really, it look to be quite nice supports. So you talk about the 99 level, but I think it's got a bit of work to do to get through those two moving averages first.
Yeah, exactly. Yeah.
Oh, very good call.
Yeah. That's another thing I'll be looking for.
That's like, what was that, right around 107, 108? It looks
like?
Like?
Yeah, exactly. Yeah. You have 107.72 for 50 and 107.13 for 20. So pretty in line with each other.
And with that, I mean, obviously I spoke about the breakout trade. That's more of a day trading type strategy for me. But if it was to come down to the moving average, it'd be kind of more of a swing approach. Something to hold for 2 or 3 weeks. So that's I've noted this one down, so I'm going to have a little look at this one. That's for sure.
Yeah. No, this honestly, I think from my perspective, because I'm running call options, I run these CSPs and covered calls on a weekly basis. For ExxonMobil, I'm really looking at this. Could be in the next 3 months or so. It could really get a very good trade setup in. It's like it's setting up for that, because this is a monthly chart. Because when you look at the daily chart, it's sometimes very hard to see what's going on with the picture, because there's just too many bars at the same levels. But once you zoom out, it's like, oh, okay, some picture is getting a little bit more clearer, especially for longer term trades. I know you guys do day trading, scalping, so it becomes, you got to go to a shorter time frame. But like for a couple months out trade, then you have to switch back to a much more zoomed out approach. So that's it from my side on ExxonMobil.
This is good stuff. And by the way, if you guys want to get more information from Kay, he's always putting out great content as well. So here's a quick list for you. You can find him on X. You can find him on his own channel on YouTube, which is fantastic, by the way, and also writing on Substack at Invest for Tomorrow. So check out Kay at Invest K. And guys, this has been yet another great week. Great information from both of you. So thank you very much. I've added my notes. I got to get bigger pieces of paper. I use this like little notebook, and I just run out of space every single week. So thanks for that. And just to kind of wrap it up here and kind of look at the coming week and where my thoughts are, end of the month, So you got some options expiration at the end of the week. You've got people trying to close out the quarter as well, right? So do I have that right?
Yes. Quarter is
Quarter
closing
end
next
is a
week. Yeah.
big deal. And you've had, keep in mind when we're talking about everything currently, the beginning of the year was a surprise to a lot of fund managers. And so there's a lot of folks that are actually behind the 8 ball when it comes to their performance for the year. And there's only 1 quarter left. So when you start looking at the end of the quarter, you get some pressure to make sure that they're not going to miss out on any upside trades. That could play into how the markets react and head into the final 3 months. So something I'll be kind of thinking about, I guess, in the back of my mind. And hopefully we get some support at these key levels and can find some moves to the upside. Sean, I know you're always trying to remain bullish like I do. And so what are your thoughts heading into the next week?
Well, it wasn't last week, was I? I was very bearish. And
look how it played out. It played out. Yeah, exactly. It played out.
For once.
Very much so.
No, we've had a sticky couple of months, really, haven't we? Let's be honest. The last couple of weeks have been red for me. I'll be honest about that. And I'm probably going to take this week off. If not, maybe just look at it every couple of days, take that time back and kind of think about what I'm doing. Moving forward, but and obviously just to close out the month, get the month of September out of the way and look to October with a new fresh pair of eyes. But on top of that, obviously subscribe to the channel. I really appreciate everything we're doing, and obviously any more viewers, obviously we're really happy about that. So that's
a great ride already, right? It's been great. Yeah, thanks for that, Sean. Always keeping us honest there and make sure that we remind everybody this is something we're having a lot of fun with, and we've gotten the subscribers up to well over 100 now. So we're going to keep marching higher. Thanks for joining us every week. Kay, what were you going to jump? I can't help myself talking this today.
No. This is perfect. So first of all, I think what Sean mentioned is very important to note that sometimes when it's not clear how the market is going, you might just want to sit out and see how it plays out. For people who do options trading, if you are already in the middle of your trade and things are not going in your favor, then that's also another reason why you should set out and not try to make up for your losses for last week. Next week, I think it's important to see how the PCE numbers will come out. Unfortunately, you won't get to know until Friday. So it will pretty much the end of the week. But I think, Nate, you put it together, right? So Q3 is ending. It's going to be a lot of pressure on the fund managers to make that profit for the customers, and it's very, very important. And generally Q4s are pretty good on an average for S&P 500 historical data. You can go take a look at it. So I'll just wait and watch. I'll see. It's going to be wait and watch, see how things play out. Don't rush into trading. Don't try to make up for your losses from last week. Get into the right setups.
Yeah, what's that?
I like it, you guys. And it's just one last note. S&P is up 12.5%, or the SPY anyways, up 12.5%, right, for the year. So despite how rough this past week was, if we do just maintain flat or get some upside from here on out in the Q4, that's a solid year. So let's pull for that, and we'll see what happens this coming week. See if we get some opportunities, maybe some hanging out on the sideline and just let it play out. And overall though, have a great week, guys, and thanks again for a great session.
All right, see you next week.